We begin this morning with the U.S. Central Bank's decision to cut its key interest rate by a quarter percentage point, the first cut of President Trump's second administration. Our Kim Bo-kyoung starts us off.
U.S. Federal Reserve has cut its benchmark rate by 0.25 percentage points. With the cut, the rate now stands between 4% and 4.25%. The decision on Wednesday local time marks the first rate cut for this year and the first since the Trump administration took office in January, as the Fed had held the rate steady since last December's cut. Speaking to journalists, Fed Chair Jerome Powell said the balance of risks has shifted as the downside risk of unemployment has increased.
While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated.
In a press release, the central bank also mentioned a somewhat elevated inflation risk due to tariffs, though Powell said the effects of the tariffs on economic activity and inflation are yet to be seen.
Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived.
One of the Fed governors, Stephen Myron, who was appointed by President Trump and only took office the day before the decision, actually voted for a bigger interest rate cut of 0.5 percentage points. According to the Fed's latest dot plot, which shows policymakers' interest rate projections, there could be 2 additional rate cuts this year in upcoming FOMC meetings in October and December. As a result of this September rate cut, the interest rate differential between Seoul and Washington has narrowed to 1.75 percentage points, with South Korea's rate being at 2.5%. Kim Bo-kyoung, Arirang News.